Well, the cement sector has been in focus given the fact that you've had two large brokerages writing detailed notes as far as the entire cement space is concerned. We've had both CLSA as well as JP Morgan giving their views as far as the cement space is concerned, and also along with that, how they're seeing demand, how they're seeing pricing, how they're seeing margin trends to pan out going forward. Now, when it comes to CLSA had a very positive stance as far as the entire space is concerned. What CLSA is saying is that they believe that demand is going to grow even better going forward, and also they went ahead and upgraded their EPS estimates for most of the stocks under their coverage, and also upgraded their stock rating on ACC from an underperform to an outperform. So on the back of that, the sector view is quite buoyant. Now, JP Morgan has a very similar view as far as the sector is concerned. However, they are trading with a bit of caution, especially when it comes to the stocks. What they're saying is that they do not dispute the strong demand cycle for cement over the next 2 to 3 years. They believe, however, that strong cost inflation, remember we are having and facing much higher diesel, petcoke, coal prices, and they believe that this could flow through to the P&L over the next couple of years. They also believe that unless price increases are there, it will be very tough to mitigate and offset the strong cost pressures that would be felt by the companies in the P&L, especially when it comes to the EBITDA margins. What they're saying is that they struggle to see large margin expansions from here. They believe that with very sharply elevated consensus estimates, and given the fact that most of the cement companies are trading near lifetime highs, they believe stocks at this point of time are already pricing in strong growth, especially when it comes to earnings. So what they've done, they believe it's now time for a breather. They have downgraded Shree Cement to an underweight from an overweight, from a neutral that they had earlier. They've downgraded Ultratech Cement to a neutral from an overweight that they had earlier. They've maintained and remained overweight as far as ACC is concerned, given the fact that valuations according to them are still quite attractive. They remain overweight on GRASIM as they believe that the volume growth in VSF will sustain, and also they see improved capital allocation as being a key catalyst as far as the prospects of GRASIM is concerned, and that is why they've maintained an overweight stance. They do believe that demand triggers are infrastructure push, return of individual home buyers, also the pre-election here. Typically, we tend to see quite a bit of construction activity coming in during that time of the year. So all of this, they actually believe are strong demand triggers. However, given that it has been such a sharp, breathtaking rally, they believe that it's now time for a breather, and which is why they've downgraded some of the stock ratings that they have, as they believe outperformance from here on could be quite tough.